Namaskaram all, this is your Sukumar Reddy and I am here back with another new video. You know, some important announcement is going to happen in this video. That is, it is the biggest news of the town. It is a talk of the town. It is nothing but PGBP video is out. Yes, what you're hearing is true. PGBP video is out. I have infused all my life into this. I have created a full PGBP P&L which covers entire concepts inside it. The less than 5 sections would not be covered, which I will cover it in the part 2 video. So why delay? Let us go into the topic. Please, I hope you are able to see my screen. Please see the screen. Let us start with giving a P&L introduction. What you are going to learn in PGBP is nothing but they will give a P&L. They will calculate a net profit. This is debit side and this is credit side. As you all know, they will include all the credit items and debit items. Now, your job is to assess whether these credit items are correctly taken and whether these debit items are correctly taken as per income tax rules. If they have taken any wrong debits, if they have taken any wrong credits, we will have to make an adjustment against it. For example, say this is the credit side and this is the debit side. Credit side we will assume it as plus side and debit side we will take it as minus side. They have taken a wrong salary income in credit side. Normally salary income should go to income from salary, but they have taken in PGBP. So credit side is a positive side. To remove a positive side, what you should do? You should minus in the answer. Simple. If they do mistake in the negative side, which is the debit side, what you should do? You will have to add back to the net profit all these adjustments so that you will get the correct answer. Simple. Okay. Now let us go into the topic. Suku is engaged in the manufacturing business of pillows and his P&L shows the below profit. So this side we can call it as credit side and this side we can call it as debit side. Now in the credit side, if there are any mistakes, which means they would have added the items in credit side, right? If there are any mistakes in the credit side, we will present the answer in this way. I hope you are able to see the screen. So we will write the net profit. Our PGBP answer starts by writing the net profit. What are all the mistakes that are present in the credit side? Credit side in the P&L they would have added, right? So we will deduct all the mistakes which are wrong. And come to the debit side. In debit side they would have taken as minus, right, as I just now said. So we will add back all those adjustments. Simple. I'm clearly repeating one more time. Credit side means positive, debit side means negative. If they do any mistakes in the positive side, you will have to minus in the answer opposite to this. If they do any mistakes in the debit side, you will have to add it in the answer which is opposite to this direction. Simple. I hope it is clear, right? Now let us not do a much delay in this. Let us go into the topic. Let us go to the credit side first. So they have taken these income or sales from business or profession. You will have to eat 2 tablets before you do the PGBP answer. That is, whatever the items that are present in the P&L should be revenue in nature. And second thing is, it should be incurred by the assessee fully and exclusively for the business purpose, which means his business is manufacturing business of pillows. Correct? His business is manufacturing pillows. So all these incomes should be related to this business. It should be incidental to this business. Therefore, income from or sales from business or profession which they are referring to the manufacturing business, yes, it is a correct item. We will put a tick. If it is wrong, we will mark it as X. We can adjust it in answer very simply. And house property income. How did house property income come in manufacturing business? Yeah, it should not come. It is a wrong item. Correct. Next, dividend income should go for IFOS. It should never come in PGBP. And income from UTI, again it should go for IFOS. It should never come in PGBP. Agriculture income is in fact an exempt income. It should not come in PGBP. Next, come to the second question. We have finished the first question, right? Let us go to the answer and fill all these numbers. So our PGBP answer should always start by writing the net profit item, which is this one. It will be given in the question. So I have written the net profit here, 61,77,430. Now what all mistakes we have found in credit side we should add back, right? Or we should minus, right? So I am making it as a minus. Income considered under other heads. Actually, those incomes should not come in P&L. It should go for other heads, right? So I have written income considered under other heads. House property income, dividend income, income from UTA, agriculture income. All these incomes have been wrongly credited to our P&L. So I am minusing from our net profit. Come to the second one. We'll go back to the second point. Second point will fully be of charging section of PGBP, which is charging section of PGBP says that duty drawbacks, which is the export related customs or excise duty. For example, if you are exporting certain things, you will pay some customs duty, right? That customs duty you would have enjoyed as expense earlier. Now the government, in order to make a development or in order to encourage a proper tax payment, in order to encourage more exports, they might give certain cashbacks called as duty drawbacks. Whatever you have paid as customs duty will be given back to you in the name of duty drawbacks, and this is deemed to be a PGBP income as per charging section, so we will take it as income. Next, correct, this item is correct, so let us mark it as a tick. So even in exam you can take pencil and simply tick inside the question the P&L items, little bit of tick, you should not write anything in the question paper, so that whatever we have marked as X, we can simply easily make an answer out of those things. Next one is import entitlement license. Yes, this license is deemed to be a PGBP income. And keyman insurance policy, in our class we would have discussed that keyman insurance policy, if it is received by the employee, who is keyman? The major person of that business, without which the business might go into losses or cannot run, in fact, correct? So if the keyman insurance policy maturity process is received by the employee, then it will go for salary head. If it is received by the employer, that is business, it will come for PGBP head. Yes, Pakali, it is received by the business, therefore it has to come to PGBP. Whatever they have included in credit is correct. Let us not do any adjustment. Gifts, perquisites or benefits by virtue of business or profession. Any gifts, benefits or perquisites written by virtue of employer and employee relationship should go to salary, whereas this should come for PGBP because it is by virtue of business or profession. Super. And non-compete fee. So Sukumar have started an institute. So some other institute similar to my business have come to my area. So I am going to pay them some fee not to do these activities. So that kind of fees is called as non-compete fee. And the person who is receiving it is out of their business or profession, right? So they will have to credit in their P&L. And similarly in our question, they got some non-compete fee, they credited into the P&L. Super, oh super, it is correct. Yes. So it is for not carrying any activity or not sharing formulas, copyrights, patents, etc. And fair market value of inventory as on the date of conversion of inventory to the capital asset. Yes, PGBP charging section says take the market value on the date of conversion of the inventory to capital asset. It shall be the PGBP income. Next, any compensation in connection with termination, modification of terms or conditions of a contract relating to business or profession. So I had entered into a business contract with for some services. Now because of my structure changes or because of my business developments, I want certain arrangements or certain terms to be changed in the agreement with my vendor. So I will have to pay a compensation to it, or the person who receives the compensation, for him it is out of his business or profession, therefore he has to credit it to the P&L. Now I am that recipient, my terms and conditions are changed. So if anyone is paying me money for changing the terms and conditions, it is my income, right? So therefore I will have to credit it to the P&L. Charging section of PGBP says this. Next, there is a very important amendment related to house property. Now let me show the notes related to it and then explain you. See here, house property versus PGBP. We have learnt that house property, if you are letting out the house property as your business, then whatever income comes from that will be charged under PGBP. We have learned this till some months back, but there is an amendment. It is saying that you have to check whether the house property is residential or commercial. If it is residential, if you are letting out the house property in a normal course, it is not your business, it will go for IFHP. If it is a commercial property and you are letting out, still it is IFHP. However, we have learnt that a residential property or commercial property, if your business itself is to let out, then it should go for PGBP, right? The amendment here is, if a residential house property is let out, even if it is your business to let out, still a residential house property should go for IFHP. Only a commercial house property which is let out as a part of business should go for PGBP. This is a very important amendment which can be expected in the exam. So I have given a question related to this. Rental income from letting out a house property. And letting out is the assessee's second business. We have learned that he is manufacturing pillows business, right? Now he is also having another business, second business, which is letting out of house property. Now no expenses were booked in the P&L. In the debit side, no expenses related to this is booked. Okay, fine, no problem. And they are telling they have got incomes like this. One is they have got the residential house. From residential house, they have got a letting out income. It is 20,000, and from a commercial house they have got a rental income of 10,000. About two numbers are denoting as GAV. Okay, no problem. Now what should come in PGBP? Only as per the amendment, only a commercial house which is related to the business should come in the PGBP, and even if a residential house is our business to let out, still it will not come in PGBP. So I will have to add back all the points which I have marked as into. Come to the next point, bad debts recovered. So bad debts, you would have learnt a point. See the screen. So for bad debts, you should check whether the bad debts in earlier years, if you have incurred bad debts and if it is written off in the P&L, you would have taken as a deduction, right? So you should check whether the recovered bad debts is allowed as deduction in the past, which means have you enjoyed the deduction, or it is not allowed, it is disallowed in the past. You have to check this. If it is allowed in the past, you have enjoyed the expense, right? Now please pay the income, whatever you have got from it, then the bad debts recovery is taxable as income. However, they have not given you the deduction in the past related to bad debts. Now you need not admit it as taxable, because in P&L when you have written bad debts, income tax have marked this as into, and they did not give any deduction related to this, which means you already suffered some bad debts related income which is there in the credit side. Correct or wrong? Yes or no? So this income which is already taxed will not get taxed again, because it is not allowed as deduction. Therefore it is already taxed in the past. Recovery will never be taxed. Simple. So bad debts recovered 1 lakh rupees which was allowed as deduction in the past. This 10,000 includes 6,000 which is allowed in the past and 4,000 not allowed in the past. Which is not allowed in the past means you would have already suffered income to this extent. So this is not at all our income which you have already enjoyed in the past. Now it is getting back. You have already enjoyed an expense, right? Now admit it as income. It is correctly added in the credit of the P&L. This is what are credits of P&L. Now let us go to the answer and fill the numbers whatever we have marked as into. So as I said, we will start the answer with net profit. We have already added all the first point related adjustments. Second point, rental income from letting out business related to a residential house property should never come in PGBP. It should go for IFHP. So we have marked as wrong there, right? That we will have to minus it from the income, because this income which is there in the credit side would be included in this. We will minus this. Next, bad debts recovered which were not allowed as deduction in the past, which means already you suffered in the past. Again, why did they include in the credit side? We will minus it. That's all. We will come to depreciation later. We'll go back to the expense side, debit side. Come to the debit side, which is going to be very lively and lovely to my dear friends. See here, expense related to the building owned by the assessee, for which you will have to go and catch section 30 to understand the terms. Please come and see section 30. Section 30 is related to building. It speaks that about two types of buildings, whether the building is owned by the assessee or building is taken on rent by the assessee for business or profession purpose. If it is owned by the assessee, if the assessee pays rent to himself for his own building, it is called as notional rent. No, it is not allowed. I have said the logic also behind this in our class. It is not at all allowed as deduction. So which means if they have taken in the debit of the P&L, mark it as wrong. In the answer, if you mark a wrong in the debit side, what should you do? You should add back. Correct? Okay, rented building used by the assessee for business or profession. Yes, if you pay rented to the outsiders for that owner, it is allowable. Rates and taxes. As soon as you hear rates and taxes, gada 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 gada, 43B section will come and hug this rates and taxes. What is the meaning of this? Artharth, what is that hugging, sir? Abdina. 43B section says that this rates and taxes can be debited in P&L, which means you can take it as an expense in the P&L only if this expense is paid within 139 one time limit. What is 139 one time limit? Return of income due date, income tax filing due date. Within that due date, you will have to pay this amount to the respective persons. Only then it is an allowable expense. If you have not paid this expense, then it will not be allowed. So it might be your own building or it might be a rented building. As soon as rates and taxes comes, section 43B will be applicable. Simple? Yes or no? Okay. Insurance. If you make any insurance to this building for the business or profession, which you are using for business or profession purpose, you can take as deduction. And even for a third person's building whose building you have taken on rent basis for our business, if I pay insurance to this building, still I can take as deduction. And come to repairs. Repairs is allowed as deduction related to this building, provided it should be revenue in nature. If it is a capital in nature, it has to be added to the assets in the balance sheet. It should never come to the P&L. True. This is what the 43B says. Rates and taxes allowed as deduction only if it is paid within 139 one time limit, that is return of income due date kula. Normally in P&L, see area. Normally in P&L, if you follow mercantile system, accrual system, you will book all the expenses irrespective of the fact that you paid it or not. True. So if it is related to business, you can mark it as tick, as I said you. But for rates and taxes alone, you will have to mark it as tick only if the payment is made before return of income due date. Simple. Now let us go and see what the question is speaking about. Expenses related to building owned by the assessee. Rent to self. No, it is not allowed because it is called as notional rent. True, it is not allowed. Rates and taxes. As soon as you hear rates and taxes, section 43B is going to come and hug them and never leave them inside P&L. It will allow inside P&L as tick only if it is paid before income tax due dates, return of income due dates. Now let us check what is given. Total rates and taxes paid is 500 rupees. Okay, nice. But 200 out of 500, 200 is paid in the current previous year itself and 300 is not paid yet. Income tax due date normally will be on 31st July of assessment year, or it might be in the month of 31st October of the assessment year. Simple, September will be the due date for tax audit reports. It is not yet unpaid. We will assume that it is not yet unpaid even after the income tax due date. Therefore, we will have to not take this 200 rupees. We should only take not to take this 300 rupees, we will have to take only 200 rupees as the deduction, which means this 300 portion which is not paid, section 43B will never allow it as deduction. We will add back to the profit in the answer. We will see how the answer should be presented. Come to the insurance premium paid. Can you take deduction of insurance premium? Yes, 100% you can take. Repairs revenue? Yes, 100% you can take as per section 30. Just now we have seen. However, repairs capital in nature you should never take as deduction. Simple. This is the building owned by the assessee. Whereas come to the building rented, taken on rent by the assessee. You are taking some third person's building on rent basis for your business or profession purpose. So rent to the owner, you are paying rent to the third person. Yes, happily it is allowable. It is not a notional rent. The rates and taxes. As soon as you hear rates and taxes, 43B will come and hug. It will allow as a deduction only if it is paid before return of income due date. And here it is not yet paid. It is paid after the return of income due date. Therefore, it is not allowed as deduction in the current previous year. Insurance premium paid. Yes, you can take for a third person's building, you're paying insurance. Still, this building is used for your business, right? So you can take it. Repairs revenue in nature can be taken. Repairs capital in nature can never be taken. It should go for balance sheet assets capitalization concept is applicable. Now last one about the rent is rent on building used for business or profession by the assessee. BP abdina business or profession, okay, by the assessee, and half of the building sublet and rent recovered is 1000. Income tax law section 30 says that if you have paid any rent and if you have recovered any rent by subletting it, then you will have to take a deduction as 6000 minus 1000, which is 5000 is your actual expense, right? But they took 6000, which means they took 1000 rupees extra, which should be added back to the net profit. Let us go and see the answer about this rent points alone. Come. Okay. Rent paid to self, notional rent, we have just marked it as wrong, right? So it should be added back to the net profit, because if there is a mistake in the debit side denotes negative, right? To rectify this negative, you should add, right? So I am adding it. In exam, you have to do nothing, my dear friends. Take the P&L, just mark if it is a correct, put a tick, nothing to be done for ticks. If it is a wrong item in the credit side, mark it as wrong. Wrong item in the credit side means what should you do? You should minus it. Come to the debit side. If it is a correct item in the debit side, just ignore it. But if it is a wrong item in the debit side indicates minus, right? Now you should add back. Simple. Okay, rates and taxes, just now I have said, when you read it with section 43B, it says that the amount which is paid only should be taken, that too the paid amount should be before income tax due date, and we have learned that 300 rupees is unpaid, therefore I have added it back. Come to the repairs, capital in nature, it should never come, so I am adding it back. Rates and taxes unpaid on a rented building, it is in fact not unpaid, it is paid after return of income due date. True. So that I will add back. And repairs capital in nature for a rental building, it should never come inside the business P&L. Then rent on building used for business purpose, a portion of it, just now we have learned that it is sublet, right? So actual rent which we paid is 6000. We have sublet a portion of building and we have got 1000 rupees as an income. So the correct expense you should take is 5000. But in P&L, if you open your eyes and see, they have taken 6000. Whatever they have taken extra 1000 rupees, that shall be added back to the net profit. Correct? Understanding things till here? Super. I hope it is understandable. Let us go for the next case. It will be section 31. We'll go to the theory. Section 31 says that plant and machinery, furniture related revenue, repairs and insurance. It purely speaks about only insurance and repairs. Sir, what if we pay rent, sir? For example, I don't have plant and machinery. I have taken plant and machinery on rent basis. So is that covered under section 31? It is not covered. However, it will be covered under section 37. It is allowable expense only, but it is not allowable under 31. That's it. So plant and machinery, furniture says that if this plant and machinery, furniture, all these things are the assessee's owned assets, if you incur any insurance related to it, yes, it is allowable. If you incur any repairs, if it is revenue repairs, it is allowed. No. You have taken these assets on rental basis for your business purpose. Then if you are incurring any insurance on a third person's building, still it is allowed, because if you don't insure, your business is going to get affected. Therefore, it is an allowable expense. Come to the repairs. Repairs only on revenue in nature repairs can be taken as deduction under section 31. This is what it speaks. Now let us go and check the content and practical numbers. Expenses related to the machinery, plant and furniture, use the asset only for 1 day. Oh my god, you have used all this plant and machinery only for 1 day. Still no problem, you can take 100% of expense. If you have used it for business even for one time, it is enough. You can take full expenditure as deduction. This you have taken on rent basis, no problem. Insurance premium is allowed. Let me mark it as tick. Insurance premium is allowed. Repairs revenue is allowed. Repairs capital is not allowed. Therefore, I will have to add back to the net profit in my answer. Come to the owned asset, plant and machineries, which is owned one. Owned For business or profession, it is used by the assessee. Repairs, is it included revenue? Yes. Capital, no, 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 no. Insurance can be taken happily. This is what we have learned about the section 31, section 30 and section 31. Please remember one thing, if the P&L has depreciation, it is always a wrong provided it is not income tax depreciation. Remember something, in PGBP, depreciation can be taken as deduction for sure, but only the depreciation calculated as per income tax rules. Normally P&L will have the depreciation which is calculated as per Companies Act. So it will straight away be added back to the net profit and we will correctly calculate the depreciation. To correctly calculate the depreciation, you should understand what are the provisions of depreciation. Carefully see section 32 guides us about depreciation. Is depreciation optional, sir? No, depreciation is mandatory expense. And what, sir, what is it speaking about? Asset owned by the assessee used for business or profession purpose. On these things, on this asset you can take depreciation. I have said you the logic behind depreciation as well in the class. Now it is just for a quick revision purpose. Let us not go into detail about the things. What is required for exam purpose will be covered here. So whatever assets you have which is used for business purpose by the assessee can be used for calculating depreciation. Simple. Now owned abdina enadhu. What is the meaning of owned? You can be a registered owner or you can still be a beneficial owner. What is beneficial owner? It is just the asset is not transferred in your name, but all the rights, responsibilities, taking care, a payment, everything has been done by you. Therefore, you will be called as beneficial owner. Legally, when you take the curtain and see you are the real owner, it is just your name is not recorded. Therefore, depreciation can be taken on beneficial owner, can be taken by beneficial owner. And hire purchase transaction, we know that only on the last installment the ownership will get transferred. But in income tax, even on hire purchase, from the day when you have received the asset, you can start taking the depreciation. And lessor only should take the depreciation in case of lease transaction. Come to the asset. Sir, asset includes all kinds of asset except animals. On animals you can never take depreciation, and on tea bushes you can never take depreciation. The tea leaves and livestock you can never take depreciation. You should also not take depreciation on goodwill. Simple. These are the things. Sir, there are two types of assets. One is active asset, one is passive asset. Active assets are clear-cutly evident that you can take depreciation. Passive assets, which means you are not using actively inside your business. Say example, fire extinguisher. I am having one-time interest of just to spray fire extinguisher, sir. Will you do that? Or just to get depreciation, one time will you just simply spray and leave it out? No, right? It is pure sheer madness. We will never use fire extinguisher unless otherwise the situations asks us. Yes or no? Therefore, we will keep that asset for the furtherance of business and safety of business purpose. It will not be used actively. Such assets will be called as passive assets. Income taxes, even on such assets, depreciation can be taken because by the passage of time, assets value will reduce, right? Okay, now come to the rates of depreciation. How much depreciation should you charge, sir? Let us categorize the assets into various parts. Furniture and fittings, buildings, plant and machinery, intangible assets other than goodwill. Goodwill will never get depreciation. Furniture and fixtures you can take 10% depreciation. Buildings, there are different types of buildings, but a general normal building will get a depreciation at the rate of 10%. Plant and machinery, in the class I have taught you that aircrafts, luxury items which do goods to the society, good to the society, you should take highest depreciation rate as 40%, a technique to remember. Now let us check. Aircrafts is a luxury item, right? 40%. Dead opposite to it on the water, what goes? Ships. So 40, which is opposite to it, is half of it, 20. Apana nadula road law, in the middle of the road, above the water, middle of the road, some vehicles will go, right? It is 40, 30 for vehicles and 20 for ships. Simple. However, on the vehicles there is some intricacy. If the motor vehicles are used in the transportation business, hiring business, then it is 30%. However, if it is not used by hiring business, normal business, say for example I am running an education institute, in that if I am using a vehicle, I will not use it more. However, a transportation business will use vehicles to the highest possible way, correct or wrong? So they should get highest depreciation. Normal business will get half of it, which is 15% depreciation. Simple. And books is doing good to the society, therefore it is 40%. Computers and its peripherals will get 40% depreciation. It is a luxury item. Nothing is said in the question, sir. It is a general plant and machinery. They are using the word just a plant and machinery. You will have to take a flat 15% rate. Simple. Come to the intangible assets, it is 25%. These are the rates of depreciation. Now come to the methods of depreciation. Depreciation methods are of two types. SLM method, that is individual asset basis. Come to the WDV method, which is block based. In income tax, if you have purchased computers, like you have 1, 2, 3 computers, all the computers will be merged in a single box and a single calculation shall be made in income tax. Such concept is called as block basis. We will never calculate depreciation on asset to asset basis in WDV method. Who should follow SLM, sir? Who should follow WDV, sir? Ulagam, entire world should follow WDV basis, which is everyone else. Who can take SLM, sir? Only the option. Apana, it is not mandatory. Only it is the option to the power generation and distribution business people to take this as a method of their preference. Even if they wish to go for WDV, they can opt for WDV, but they should exercise this option before the income tax due date of their first year of business. Simple. Come to the pro forma. How should we calculate depreciation when we opt for WDV, sir? It is, you should merge all the same type of assets having same rate of depreciation and same type. That is called a block. Say for example, you have computer 1, computer 2, everything should be merged and placed it in a single pro forma. But you cannot merge computer and books. Simple, they are different types. Even though they are having 40 same rates, they are different types. So only the same type and same rate should be merged. Opening WDV is the first step in the pro forma of depreciation. Add acquisitions and put to use, which means only if you put to use you can take depreciation. If you don't put to use, you can never take depreciation in income tax. You should check you have put to use for how many days. If the number of days you have used for greater than or equal to 180 days, you have to place it here. If you have used for less than 180 days, place it here. All these three totals gives you a total. From this you should minus if you have sold any asset. If your asset is even damaged, the insurance proceed should be minused here, which means you will get a closing block for depreciation purpose, right? On this block only depreciation should be calculated. How should we calculate, sir? See here, the depreciation should be calculated as, take the gross block for depreciation purpose which we have derived here. On this first preference, separate the assets acquired and put to use for less than 180 days. Apana next category is greater than or equal to 180 days, right? No, it is called as balance. Okay, which means say for example you have 1 lakh as here, you have 20,000 as less than 180 days, which means balance should be written as 80,000 blindly. You should never check greater than or equal to 180, opening balance, nothing. You should write balance as such, blindly follow this technique. Simple. Okay, on this 20,000 you should calculate depreciation. Say you have got 15%, for example depreciation rate, you should take only half of depreciation. Income tax says if an asset is put to use for less than 180 days, you should take only half of depreciation rate. Come to the balance. On this you can take 15%, 100% you can take the depreciation, no restrictions on this. So this plus this will give you depreciation. Once you minus depreciation, you will get the closing WDV. Now it is high time for us to see some numbers, right? Let us go and see some numbers come. Depreciation, I have given it in the footnotes. They have given some list of assets. Additional information, they have given some list of assets. So there is asset A called plant and machinery. If the question is silent, what did I say? You should take general plant and machinery rate 15%. Opening balance is 18 lakhs. Opening WDV. So opening WDV is 18 lakhs. And new asset purchased on 1/6/2024 from June till the year end 31st March, it is obviously greater than 180 days. So this you should place it under greater than 180 days. You can count from June to 31st March, how many days will you be using this asset? And they have purchased a second hand asset. Oh, on 1/5/2024, again from May to March, if you see, you will have greater than 180 days, so it will come under greater than or equal to 180 days category, both the assets. So let me calculate the depreciation. I have already calculated depreciation. Please see this. So let us calculate for plant and machinery. Block, you should write the name of the block. Block, plant and machinery 15%. Opening WDV they have given as 18 lakhs. Additions greater than or equal to 180 days, 3 lakhs plus 1 lakhs, 4 lakhs. So this will give you total as 22 lakhs. Less than 180 days, there is nothing. So did they make any sales given in the question? Nothing. So let us mark it as 0. Now you have gross block as 22 lakhs. What should you do? Take the gross block as note. Less than 180 days, give a first preference. In this question, there is no less than 180 days, so it is 0. Balance only you should write. You should never write greater than or equal to 180 days. So balance out of 22 lakhs plus 0, if you minus balance, you will have 22 lakhs. On this, you can take 100% depreciation, 15%, which comes to 3,30,000. So depreciation, I will minus 3,30,000. So my answer I can mention under less category. I have taken the depreciation which is wrongly given in the P&L as addition, right? I have marked this as into, right, which means I should add back to the net profit, right? But see here, I have added back to the net profit. Similarly, the correct depreciation I can minus from my net profit. Simple. Whatever they have given in the P&L, I have added back to the net profit because only income tax depreciation is allowed. I have manually calculated income tax depreciation and now I have minused from my P&L. Simple. This is what depreciation concept speaks about. Yes or no? And no depreciation is if asset is not put to use. Super. That is what I have just now said. Now come to there is one more concept which is called as dead block or negative block. The saddest phase of the life. Dead block or negative block. What is it? What is it? Is the block going to die? Yes, true. What is dead block if you ask me? If the number of assets in the block becomes 0, which means say here you have computer, number of computers 1, opening WL you have 1 lakh. Then you made purchases, additions. You purchase another one asset, one computer for 1 lakh. And you made sales. You made 2 asset sales. 2 computers you sold for 1 lakh. Which means your number of assets in the block is 0. This situation is called as dead block. In exam, you will have to mention the word as block ceases to exist. What should you do if the block ceases to exist, sir? In such cases, make the block value as nil. Whatever you have, the balance in that block should be marked as 0. Appa, what will you do with the number present there, sir? You will have to treat that as short-term capital loss or short-term capital gains. How should you find, sir? Opening WDV plus additions minus sales. If it is positive, it is called short-term capital loss. If it is negative, it is called short-term capital gain. Let me quote you an example carefully. See, for example, I have computer, number of assets is 1. And opening WDV balance. Opening WDV I have 1 lakh. Super. I made additions. 1 asset for 50,000. Now my total is 1,50,000 with the 2 number of assets minus sales. I sold all the 2 assets for 66 lakhs, 60,000 or something. Whatever number I get, my block worth is 150, but I am selling it just for 60,000, which means 90,000 positive number is called as closing WDV, right? But you should never write 90,000 as WDV. You should forcefully mark it as 0. This 90,000 is called as short-term capital loss. Always it has to be termed as short-term because you don't know when asset is purchased and when asset is sold because of this block concept. Yes or no? So therefore we will take it as short-term capital loss because 150 worth item, you're just selling it for 60,000. Correct or wrong? Which means it is a loss. Correct or wrong? Correct, right? So like this we will have to calculate the answer. Simple? Yes or no? Okay. And one more important thing is, if the block becomes negative, the block is alive, but the block becomes negative. What should you do in such case? Example, see here. Again, take a computer block. Number of assets is 1 and value balance is 1 lakh. You have made additions, one asset with 50,000. Now you have two assets worth 1,50,000. Now you are selling only one asset, which means your block is still alive, it is not dead. But this one asset you have sold for 2 lakh rupees, which means 150 minus 2 lakh, you will get 50,000 as a negative item. In such scenarios, you should write the balance one asset value as 0 forcefully. Then what happens to this negative 50,000, sir? It is nothing but short-term capital gain. How do you tell it is gain, sir? Array, 1,50,000 worth asset, they are selling it for 2 lakhs, means you are selling it for 50,000 profit, yes or no? Therefore, it is nothing but short-term capital gains. In PGBP closing balance of the asset, you should write 0 as the value of asset forcefully. That is what, if the block value turns negative, sales of any part, but because of sales of any part of the asset, such block is negative block, and block can never be negative. Therefore, make the block as 0 forcefully. Whatever balance you have, transfer it to short-term capital gains. In the year where the asset ceases to exist or the block has been negative, you should never calculate depreciation. Simple. This is about the asset of WDV. Come to the SLM asset. SLM asset is normal. You will have to calculate based on various methods in companies, right? For Companies Act or in accounts, you will calculate it. Similarly, even in income tax, asset by asset, you can calculate as per accounts. Come to the SLM asset. Come to the SLM asset. If the assessee is engaged in the power generation or distribution business, we have learned that he have got an option to choose SLM basis. If he had choose SLM basis, then let us see. Oh, he is selling in the year other than the year in which asset is purchased. For example, he purchased in year 1. He is selling in different year like year 2, year 3, year 4. Then this concept is applicable. What is this concept, sir? Let us peep inside. Come. Tax shall be calculated as below. Actual purchase cost 200 minus depreciation at SLM 20 rupees will give you closing balance as 180. Again in the second year, this is in year 1 and year 2, they are calculating depreciation because SLM they will have to calculate uniform depreciation. So 20, you are having 160 worth closing WDV. Now this 160 is getting sold for 150 rupees, which means it is a loss rate. This loss should be called as terminal depreciation in income tax language. What will you do with this terminal depreciation, sir? Reduce it from the net profit. If it is already given in the P&L, if as a debit item, put as a tick, it is a correct item. However, come to the next case. 160 worth asset is sold for 180. Wow, it is 20 rupees profit. Therefore, it is called as balancing charge. This profit in income tax language should be called as balancing charge. What will you do with this? Add to the net profit. If already they have included in the credit side of the P&L, put a tick, it is correctly added. Come to the next case. 160 worth asset is sold for 210. Bumper bumper profits. How do you call this as bumper profit, sir? Array, open your eyes and see. A 160 worth asset is sold for more than the original cost. True? Therefore, we will follow a ladder concept, which means 160, 200 and the highest price is 210. This 160 to 200, you have got a 40 rupees profit, right? This is called as balancing charge. The profit over and above the original cost is called as capital gains. That is what I have did up to the original cost. In the ladder I have just now drawn. We have 3 stages of ladder. One is 160, original cost is 200 and 210. 160 to 200, you will get a profit of 40, right? That profit of 40 is called as balancing charge. However, 200 to 210, you have got extra profit of 10 rupees, right? That is called capital gains. So here it is not 210, it is 200. Simple. Understood? This is about the SLM. We have learnt about WDV sales as well as SLM sales. Only capital gains shall arise if the SLM asset is sold in the same previous year. Oh, if the SLM asset is sold in the different previous year, you will get balancing charge, terminal depreciation and capital gains. But if you buy in the same year and sell in the same year, then what happens, sir? Nothing will happen. Straight away capital gains comes. No concept of terminal depreciation or balancing charge. Simple. Following the concepts? Okay. Next topic is additional depreciation. Additional depreciation. You're getting normal depreciation. In addition to this, extra depreciation will be given. Adu per the additional depreciation under section 32(1)(2)(a). What is it, sir? How much can you claim, sir? Abdina, a flat 20% on not WDV on the original cost straight away. However, you should put to use asset for greater than or equal to 180 days. You can claim 20% on each plant and machinery one time. For example, in year 1, I purchased new plant and machinery, I can take 20%. Year 2, no, on the same new plant and machinery, I can't take. But if I purchase another new plant and machinery, on this I can take. Which means each new plant and machineries can take 20% one time for each plant and machinery, I am telling. Correct or wrong? However, sir, what if they put to use for less than 180 days? Array, in the year of putting use, take half of it, which is 10% on the original cost. Balance half, take it in the next year. Adhikapuram, you should not take on the same asset. However, if you purchase a new asset in the next year, on that you can take depending on the put to use. Clear? This is how it will work out. Year 1, year 2, year 3 represents related to the same asset. Related to same asset. However, if another new plant and machinery is purchased, then you can take again, then additional depreciation can be taken on such asset for one time again. Then again new plant and machinery one time, which means the artha, what I am trying to convey is each new plant and machinery can be enjoyable, can be used for taking additional depreciation one time on that plant and machinery. If the assessee is purchasing every year one new plant and machinery, every year he can take additional depreciation on that plant and machineries. Simple, clear? Who can claim this additional depreciation, sir? Any assessee who is in the business of manufacturing of article or thing. Which is a secret message that Sukumar is engaged in manufacturing business. Correct? If Sukumar is engaged in manufacturing business, as soon as you read the question, the word manufacturing business, you will have to write down the assessee is eligible for depreciation as well as additional depreciation. Correct? If you write in exam, as soon as you read the first line, it will be helpful. Now come back to the notes. So assessee engaged in manufacturing business of any article or things, which includes printing and publishing of newspapers, printing, everything is also termed as manufacturing. They also can take additional depreciation. And second people is power generation and distribution business, but they will have to opt for WDV. Only if these people opts for WDV, they can take additional depreciation, 20% on original cost of plant and machinery, one time for each plant and machinery. But assessee can take all the years if he purchases new plant and machinery, all the years one time for one asset. Okay, additional depreciation can be claimed once on every new plant and machinery. I am not telling every year. I am not telling year by year basis. I am telling every new plant and machinery basis. Every year he purchases, every year he can take additional depreciation. Okay, there is some important information. No additional depreciation on second hand plant and machinery. No additional depreciation on plant and machineries or computers. Computer is again a plant and machinery. Computers or plant and machineries used at office premises, no additional depreciation. Used at residential accommodations, no additional depreciation. However, if they are using these computers or plant and machineries at sites or construction areas, not in admin places, in the construction manufacturing sites, they can happily enjoy additional depreciation, which is 1000 times important. Simple. They might ask this in MCQs. Computers path you will think that no additional depreciation, but computers used at site can enjoy additional depreciation, and there is no additional depreciation for any plant and machinery on which you have claimed 100% deduction anywhere else in the chapter or anywhere else in the income tax. Simple. Which means they have given 100% reductions. Next, on vehicles, it includes ships, aircrafts, all these things. You can never claim additional depreciation on all these assets. And forklift truck used at site, on this additional depreciation can be claimed. Okay, it should not be included in the vehicles category. Now come back to our answer. Let us continue with the depreciation case. We have additional depreciation also to be done. We have just done depreciation on asset A, which is plant and machinery. We are also having additional depreciation, right? Let us go to the key. What all we have? We have new asset which we have enjoyed depreciation. We have second hand asset, we have enjoyed depreciation. Now come to additional depreciation. We can take additional depreciation on this. We can never take additional depreciation on this. Simple. Now come to the key. See here, after depreciation I have taken additional depreciation. How much additional depreciation I can take? 20% on the original cost of asset. So new plant and machinery is purchased for 3 lakhs. So on this 20% comes to 60,000. On this 1 lakh I cannot take any additional depreciation because it is a second hand plant and machinery. Simple understanding. And even this is put to use for greater than or equal to 180 days. So entire 20% I can take. However, if it is put to use for less than 180 days, I should take only 10% in current year and 10% in next year. This is what my depreciation looks like. Also, they have given additional assets. We will check what is it and calculate depreciation. Come here. Where is the question? Yes, it is here. So second type of asset is computers. They are having opening balance of 6 lakhs. They want us to use 40% depreciation rate. So let us follow normal computers as 40%, but these computers are used at site and they're asking us to calculate 40%. Let us use it. New asset is purchased on 12/12. If you calculate, it will be less than 180 days. From 12/12 to 31st March, you will get less than 180 days, which means depreciation can be taken half. Additional depreciation can be taken half only. Now let us go to the pro forma and see how should we calculate depreciation. Just now I said you we should calculate the pro forma based on pro forma. They have opening WDV 6 lakhs, put to use for greater than or equal to 180 days. There are nothing. We have only one purchase which is less than 180 days, that is 1,20,000. This two totals to 7,20,000. There is no sales, therefore gross block for depreciation purposes 7,20,000. Come to 7,20,000 on this less than 180 days, greater than 180 days is a balance. Correct? Less than 180 days it is 1,20,000. Out of 7,20,000, 120 points now. Balance is 6 lakhs. On this you can enjoy 40% depreciation, only half. On this you can enjoy entire 40%. It comes to 24,000. It comes to 2,40,000. Total is 2,64,000. And on this you can claim additional depreciation as well. It is original cost. Your original cost is 1,20,000. On this you can take 20%, but only half, which is 10% only can be taken because the asset is put to use for less than 180 days. Correct? So depreciation and additional depreciation both. The P&L depreciation we have added back in the answer. Am I right or wrong? Now correct depreciation you can minus it from the net profit. See here, see the screen. So whatever they have given in the P&L, I have added under the add category. I have written. Now correct depreciation and correct additional depreciation I can write under my less category because I am supposed to minus my depreciation. From working note number 1, I have derived these calculations. Simple. With this we finish the depreciation topic. Now, last thing about depreciation and additional depreciation is what is the value of asset, sir? Value of asset abdina cost of asset for depreciation purposes. You should take the purchase price. You should also add the transportation charges. You should also add the installation charges. You should add the GST, which is non-refundable abdina GST on which ITC is not claimed. Interest on loan up to the asset is put to use. We learned the capitalization concept. Until the asset is put to use, if you have paid any interest, that should be added to the value of asset. After the asset is put to use, if you pay any interest, it should go as an expense in P&L. Simple. And if you receive any government grants or subsidies, or the first trial run you will make some output, right? If you sell and get some money, everything should be minus. Now whatever value is left over, that is called cost for depreciation calculation purpose. However, if you make any of these payments greater than 10,000 rupees in a single day to a single person, then such payments will not be treated as cost if you pay it otherwise than by account pay check, account pay bank draft or demand draft, electronic clearing system, which means to avoid cash transactions, government is keeping such restrictions. For example, I have purchased 10 lakh rupees. This 10 lakh rupees I paid in cash in a single day to a single person. Then 10 lakhs will never be added as purchase price. It is zero. Simple. However, I have 5 lakhs paid in ECS mode and I have another 5 lakhs paid in cash mode. This cash mode alone will be excluded. ECS can be taken as purchase price. Simple. With this we finish the depreciation topic. Now let us go back to our P&L. Where are we standing? We're standing near depreciation. Okay. Legal charges for drafting MOA and AOA. Oh, this is called as preliminary expenses. If a preliminary expenses are given in the question, we will have to go and learn a concept from section 35D. What are preliminary expenses? It is preparing the feasibility reports, preparing MOA, AOA, drafting along with the registration charges, survey charges, engineer charges, and what all other charges notified by CBDT will be covered as preliminary expenses. This deduction can be taken only by resident assessees. And how much should we take the deduction, sir? If you ask me, we have to calculate 2 steps. Step 1, calculate actual preliminary expenses we have incurred and calculate eligible preliminary expenses, whichever is lower. That will be answered for this step 1. What is this eligible preliminary expenses, sir? If the assessee is an Indian company, you should take 5% of the value of assets, which is cost of project, or 5% of capital employed, which is the capital plus long-term borrowings. This renduthula whichever is higher, that will be eligible preliminary expenses. You have to write it here. However, if the assessee is non-corporate, other than company, then he can straight away take 5% of the assets cost, which means actual cost or 5% of the assets value, whichever is lower. You will get an answer, right? And the answer you will have to equally give for 5 years, which means the answer divided by 5 will give you amortized amount, the amount that has to be amortized over 5 years. Simple. This is what an audit is compulsorily for this expense. Okay, they have given 28,000. Apana, how much should answer be? The step 1 is actual preliminary expenses or eligible preliminary expenses. Actual preliminary expenses we have incurred is 28,000. Sukumar P&L idu, which means he is an individual, right? We will assume that he is a resident. Therefore, 5% of cost of project abdina assets. So 5% of 7 crores. We will get some number. Whichever is lower should be the answer for step 1. Correct or wrong? Let us see the answer. That you will have to divide over 5 years equally. Now let us go and see the answer. Though actual preliminary expenses 28,000, 5% of cost of project, because Sukumar is an individual, therefore 5% of 7 crore, which gives you 35 lakhs. Whichever is lower is 28,000 is the answer for step 1. Now 28,000 should be amortized over 5 years, which is 5,600 should be given for each year. But how much did they debit in our P&L Patus? They have debited 28,000, which means how much excess they have debited? They should debit 5,600. Excess 22,400 should be added back. 4/5, you can simply tell us 4/5 of 28,000 should be added back. Simple. This is what about preliminary expenses. Next concept is VRS compensation, 35 DDDA, which we have learnt in salaries chapter, voluntary retirement scheme. Okay. If the company pays voluntary retirement scheme money to the employees, it is an expense to the company, right? Then if they debit the entire VRS in P&L, the amount will always be high, which means it will affect the profit, where income tax will not be properly paid, will get affected, right? Therefore, government says this VRS compensation should be allowed as deduction equally over 5 years. Artharth another expense divided by 5. You will get each year related expense, right? This you can enjoy over 5 years. Example, Sukumar Private Limited paid 5 lakh rupees as VRS to ex-employee. Now, how much Sukumar can take deduction in each year? The company can enjoy deduction 1 lakh every year for 5 years. So that 5 years, if you see, 5 lakhs would have been enjoyed. Now come to the P&L and see. VRS compensation, they have taken 5 lakh rupees, which means only 1/5 is allowed in each year, correct? Yes or no? Which means 4/5 of 1 lakh rupees should be added back to the net profit, correct? We will be adding back at bottom. We'll see later. Next, miscellaneous expenses. All these things will be covered by section 36. We'll go and learn what is 36 speaking. If you pay any insurance on stock in trade, it is happily you can allow it as expense provided it should be paid, which means due basis it is not allowed. Normally entire P&L will be based on due mercantile basis, but certain expenses will be allowed only if it is paid. For example, section 43B there, and now in section 36, insurance related to stock in trade. Come to insurance related to health of employees. It is allowed as deduction provided it should not be paid in cash. Oh, next comes our Alagu Kuti, section 43B. Madam, we are seeing for the second time in our video. She is called as section 43B. What all she likes? Abdina, she likes rates and taxes there. Now she likes employer contribution to employee welfare schemes like RPF, ACF, AGF. She likes employer paying bonus and commission to employees. She also likes interest on loan taken for business purpose. But from where did you take this loan? If you have taken a loan from Scheduled Bank, NBFC, state financial corporations, and many other SIICs, all these places, if you take loan, section 43B likes. Arthat enadu, sir, what you are trying to say? All these three things, if you find in P&L as expense, since 43B likes them, they will be allowed as deduction. You can mark it as a tick only if these items are paid. When it should be paid? Within written off income due dates. We have learned, right, in rates and taxes, due dates, that is 139 one time limits. Kulla, if they make all these payments, you can mark it as a correct expense in the P&L. No need to adjust it. But if they have not paid all these expenses, it should be not allowed as deduction. You should add back to the net profit because it is there in the debit side, minus side. Correct or wrong? What is the meaning, sir? A, B, C shall be allowed as deduction only if such payments are made within 139 one-time limit. What is 139 one-time limit? It is nothing but income tax due dates, return of income due dates. Purida. However, if the employer is contributing to unrecognized funds, here we are speaking only about welfare schemes which are recognized. If they are contributing for unrecognized funds, nothing is allowed as deduction. Now let us go and see something in the P&L. Insurance premium on stock due. Oh, as per section 36, it is not allowed as deduction because it is stock in trade. If you make any insurance premium payment, it is allowed only if the payment is made. And stock related insurance premium which is paid, yes, happily you can take this. Group insurance of employees paid in cash. No. Just now we have learned group insurance of employees other than cash, super, you can take this as deduction. Simple. Which means what should you do? This is wrong and this is correct. This is wrong and this is correct. Which means for the answer net profit under additions category, you should add 100 and you should add 200, which I would have already did in the key. You can later refer it. Come to the bonus or commission. As soon as you see the bonus or commission, Madam, 43B will come and hug them. Artharth another bonus or commission can be marked as a tick in the P&L only if they are paid within 139 one-time limit. When did they pay? Let us see. 1,20,000 is the expense. Only 1 lakh is paid before July or October of the assessment year. And 20,000 is not yet paid, which means this will not be allowed as deduction. So who says this? Section 36. Read with. Section 43B, madam. Simple. Okay, so what will be the answer? Under additions category, you should add back how much? Only 20,000 should be added. This is paid, this is correct. Put a tick for this. Next, employer contribution to RPF. Oh, employer is contributing to the welfare schemes of the employee, which means 6,25,000 he paid. 43B will come and again hug, because this is also covered. If it hugs, what is the meaning? If it is paid within 139 one-time limit, it can be marked as tick. If it is not paid within 139 one-time limit, it is not allowed as deduction. So 6 lakh is paid before the 31st July 2025 or 31st October 2025, whatever the income tax due date is. Question will tell you in the exam, or based on the turnover, you can judge what is the income tax due date. I will cover this in the next part, how to judge the income tax due dates. So 6 lakhs paid. In the same previous year itself, super, it is allowed. 25,000 is not yet paid, which means in the answer under net profit additions category, you should add only 25,000, because that is only the mistake. Come to the employer contribution to NPS, 10,000. For NPS, there is a provision. If the employer is contributing to the NPS, what happens? The maximum deduction that can be taken is 14% of employee's salary, which is basic salary plus dearness allowance in terms. Now, how much the question will tell you how much is employee's salary. Employee's salaries is 8 lakhs. So 8 lakhs la you can maximum take 14%, which means they have taken 10,000, which is obviously well within the limit. Therefore, it is fully a tick item. Simple. Okay, now let us go and finish the notes related to this. So consolidatedly, what you are trying to say, sir? Section 43B will be applicable for these 3 items. However, Section 43B will never be applicable for employees contribution. Right? Don't get confused. Listen. There are 2 contributions you learned, right? One is employer will contribute to PF, whereas employee also will contribute to PF. Employer contribution is an expense to the employer. They will debit in the P&L. Employee's contribution is nothing to the employer. He will just act as a mediator, which means the employee's share of contribution the employer will collect, and employer's share he will add to this collection, and totally he will deposit in the PF fund. Simple. Now he is acting as a mediator for the employee's contribution, right? He should act olunga, he should act and behave properly. The rules are very, very strict here. See here. What is it speaking? Employees contribution to various welfare schemes. If the employer does not deposit the share of employees contribution collected for various welfare schemes within the time limit of that respective fund due date, of that respective welfare fund due date, not 139 one time limit, not income tax due date, that respective fund due date. Abdina, for example, say employer is me, I collected X share, employee X is my employee, I collected his share of PF. Okay, his share of PF Act says you should deposit within next month 15th. Apana, if I deposit even on 16th, entire collection amount will be added as my income as a penalizing gesture. It is nowhere my income, my dear Pattus. The employee's contribution I have just taken as a mediator. Still it will be added to my net profit as my income if I don't behave like a proper mediator. If I collect PF, then go and check that respective PF due date. PF Act says within next month 15th you should deposit. Yeah, you should deposit within next month 15th his contribution. My contribution I can deposit before income tax due date, but his contribution I should deposit within that fund due date. If I deposit even one day lately, entire collection amount will be added as my net profit as a penalizing gesture. Oh God. Okay, then such contribution of the employee shall be added to the employer's net profit as deemed income. Return of income due dates are never applicable in this case. Return of income due dates 43B is applicable for employer share, not for employee share. Okay, super. Next concept is interest on loan taken for business purpose. From whom you are taking loan, Rapatos? You are taking loan from scheduled banks, PFIs, SFCs, SIIC, state investment corporations, NBFCs, cooperative banks, industrial investment corporations. So if you are taking loan from these people, 43B will throw an arrow and come and attract them, which means the interest on these loans taken from these people, if you pay within income tax due date, only then in the P&L debit side you can mark it as tick. If you don't pay within income tax due date, it shall be marked as wrong. However, if you take from others, everything is allowed. Even if you pay or if you don't pay, no problem for us. 43B will not come. What basis? Mercantile basis company follows. So it is allowed as deduction. Super. Interest is not equal to, certain things are not treated as a deduction. Interest is taken on a loan taken for paying income tax. You don't have money to pay income tax. You have taken a loan. Now on this loan you will pay interest, right? That is never allowed as a deduction. Interest for late filing, paying income tax, advance tax, TDS, TCS, all these things, income tax will tell certain deadlines. If you pay beyond the deadlines, then they will charge interest from you. That interest is also not a allowable deduction. Then if TDS complaints, for example, government says if you make interest payment to any person, you should deduct TDS, but you have not deducted TDS or you deducted but did not pay, then such interest expense should be disallowed. To some extent we will learn in TDS concept 40A, 1A, 40A1 and 40A3 we will learn in some other time. Interest on loan taken for asset purchase, until the asset is put to use, that interest should never be taken in the P&L. I just now said you, until the asset is put to use, you should add it to the cost of asset. After the asset is put to use, you can take it in the P&L. Simple. So until the asset is put to use, it is not an interest at all. Capitalization concept is applicable. Interest on my own capital. Partner or proprietor is infusing some capital in the business. If he takes any interest on that capital, that is not at all as allowed as a deduction in P&L. Now let us go and see some examples of this. Interest on loan taken for business or profession purpose from a scheduled bank, 43B will be applicable, which means they have taken 50,000 as a deduction. How much is paid within 139 one time limit, that much will be allowed as deduction. Balance is not allowed. Paid 20,000 in the same financial year itself, in the same previous year, super, it is allowed as deduction. This is not allowed as deduction. Therefore in the answer net profit additions category, you should add 30,000. Simple. Next, interest on loan taken for paying income tax. No, it is not allowed. Just now we have read asset purchase, and interest until the asset is put to use is 1 lakh. Interest after the asset is put to use is 20,000. Mottama 1,20,000. Until the asset is put to use, it is not at all an interest. So for the net profit additions category, you should add back entire 1 lakh. This 20,000 will come in P&L because it is after put to use. No problem, it is a business item. Correct or wrong? Earning exempt income, you have taken a loan for earning exempt income, and the loan mela pay panra interest is not allowed as deduction. And interest on non-payment of income tax, I said if you don't pay income tax on time, they will charge interest, right? Again, that is not allowed. TDS, TCS complaints not allowed. Next, come to the next topic, which is family planning expenses. Family planning expenses is allowed only for company associates, which means in our question, Suku is the manufacturer. Suku is not a company. Therefore, entire family planning expenses is not allowed as a deduction. To the net profit in the answer section, additions category, you should add back entire 12,000. Sir, what if the question says that Suku is a company? Then what should you do? It says that what all you incur revenue nature expenditure related to family planning, fully allowed as deduction. Whatever you incur as capital expenditure, 1/5 is allowed over 5 years. Similar concept like VRS, 4/5 will be disallowed. If they take entire thing in the P&L, 1/5 only is allowed over 5 years. Each year 1/5 is allowed, and cash payment should never be greater than 10,000. If it is greater than 10,000, you should make payment otherwise than by cash only. We learned account pay, check account pay, bank draft, electronic clearing system, all those things. It should be otherwise than by cash method only. So that is what family planning concept. Here it is into. Nothing is allowed because Sukumar is not equal to company. Come to the next concept, which is after family planning, we have zero coupon bonds. If the company is issuing coupon bonds to the people, for example, face value of the bonds is 100, they will issue at just 90 rupees, which means 10 rupees is a loss to the company, right? This discount, we call this as discount. This discount, if they debit entirely in the P&L as 10 rupees, it is not correct. The 10 rupees should be divided equally over the life of bonds. Apana say for example the company issued 60 months bonds, then it should be 10 rupees divided by 60 months. Each month how much ever it comes, only to that extent it should be taken in P&L. Balance excess should be add back to the net profit. This is zero coupon bonds. Come to the bad debts. If you create any provision or doubtful thing to the bad debts, it is never allowed as deduction. Only if it is completely written off in the books of accounts, and it should be related to the business, it should not be personal in nature, only then it is allowed as deduction. Let us see the bad debts question. Bad debts 66,000, otherwise out of 6,000 3,000 is doubtful. No, it should never come. Completely written off in the books, yes, it should come. And personal bad debts, no, it is not related to business, it should never come. So to the net profit, answer under additions category, what should you do? Add back 3,000 and add back 1,000 as well. This 2,000 is a tick item, nothing to be done in the adjustment. Come to the next concept, securities transaction tax and commodities transaction tax. When you purchase and sell shares, they will impose certain tax, like how you are paying income tax, like how you are paying GST. When you are trading in shares or commodities, they will impose certain tax on you. It is called as securities transaction tax or commodities transaction tax. Now in P&L, if they give STT and CTT, is that allowable expense or not allowable expense? Answer is it is allowable expense if your business is to trade in shares. If it is incidental to your business, in the given question, Sukumar is in manufacturing of heart pillows business, which means it is not share trading business. For him, if he does share trading, it is a into. Simple. So it is allowed only if it is incidental to business. Let us go and see the question. Securities transaction tax and commodities transaction tax, it is never allowed because Sukumar is in not share trading business or commodities trading business. So you should add back to the net profit. Provisions or contingencies, always remember provisions or contingencies are not allowed as deduction. Next, payment expenses. For this I will have to teach a general notes. Income tax, if you are paying tax related to income tax, it is not allowed as deduction. If you are paying interest related to income tax, not allowed. Late fee, not allowed. Penalty, not allowed. However, come to other taxes, say example GST, rates and taxes, 43B gada will come and have. What is 43B? By now you should have understood. If that payment is paid within 139 one time limit, in the P&L you can make a tick, or else it is not a tick, correct or wrong. So GST you are making a payment, yes, you can take it as deduction. On GST you are paying any interest for late payment of GST, yes, you can take it as deduction. You are paying late fee for filing lately GST returns, it is still allowable deduction. However, penalty is not allowed as deduction because the logic is it is breach of law, it is breach of contract between the department and the assessee. Simple, it is allowable as deduction. Whereas you are calculating income tax, how can you include income tax items inside this? Yeah, so any income tax item is not allowed. So they have taken income tax payment 150. No, and no. However, they have taken GST related payments. As soon as GST comes, 43B comes, paid 5,000, super, it is allowed, assuming it is paid within 139 one time limit. Unpaid 2,000, no, it is not allowed. Late fee allowed, interest allowed, penalty not allowed because it is breach of law. Simple. Any other expenses, we don't know what should we do. If they give some kind of any other expenses, then we should go and take help of section 37. Any expense which is not covered under section 30 to 36, which we have discussed till now, then it is covered under 37. What it is speaking, sir? Deduction you can take provided it should not be in capital nature. Apana, it should be revenue in nature. It should not be in personal nature. Apana, it should be wholly and exclusively related for business or profession purpose, and it should be incurred in the current previous year, and it should be incurred by the assessee himself, not some third person. Simple. So let us go and see. They have given some expense in the exam which is not personal and not capital in nature, and it is incurred by Suku in the previous year. Happily you can take this as deduction. Simple. And next come to the other notes. Any illegal expenses or CSR expenditure are not allowed as deduction if they are not wholly. Why they are not allowed as deduction? Because as they are not wholly and exclusively related to the business. CSR expenditure means as the corporates are creating some damages to the nature, environment, yes or no, they are supposed to do some good things to the society like planting trees, cleaning water, whatever it might be. So that expenses, if they debit in the P&L, it is not at all a correct expense, because how is it related to their business? Yeah, if the corporate makes a plant, I mean if they plant a plant, then will that increase their sales? No, right? Therefore it is not wholly and exclusively related to their business purpose. It is not allowed. Illegal nature, no, it is not allowed. Come to the next concept. Forfeiture of advances. What is forfeiture of advances? It is nothing but cancellation of advances. I pay some money to the outsiders for some purpose as an advance. Now if I breach any terms and conditions, they will not even pay 1 rupee back to me. They will forfeit everything. That is called forfeiture of advances. Now I have given a person for advances for purchasing of raw material or goods. Then they have cancelled that advance. It is a loss to me. It is an expense to me. It is 100% allowed as deduction. However, I have given an advance to the other person for purchasing a capital asset. I breached some terms and conditions. They cancelled the entire expense. Then entire forfeiture of advance is not allowed as deduction because it is covered in capital gains and IFOS, not here. So let us see here. Advances forfeiture by our creditors or parties, whomsoever it is. Advances paid for raw material or goods, 1000 rupees. Advances paid for capital asset purchase, 1000. Capital asset purchase, you should never take it as deduction. It is wrong. It is take. So you have to add back to the net profit 3000 rupees. Simple. Come to the next category. If you have any advertisements in pamphlets, brochures, souvenirs, where are you advertising this? Are you taking help of political parties and advertising related to political party advertisements, or others like Times of India, Hindu? If you are advertising in others, obviously it is for your furtherance of business. It is allowed as deduction. However, if it is related to political parties, no deduction is allowed because there is a logic behind this. Government gives you 80 GGB and 80 GGC deduction for such expense. Again, why in P&L double deduction? So we will not give any deduction in P&L. Come to the answer. Question. Advertisement in advertisement in pamphlets of Hindu newspaper, advertisement in pamphlets of political parties. This is never allowed as deduction. This it is allowed. So to net profit, you should add back 20,000 only because it is a wrong. Wrong is in the debit side. Debit side denotes minus side. A minus side can be corrected by adding back only, right? Okay, we are about to the last stages of completion. We have entered into section 40. Section 40, expenses payable or paid to outside India non-resident or outside India, or expenses payable to a resident. We will bifurcate into two categories. What is going to happen? Carefully see here. Whether you are paying salary to that non-resident or outside India, or you are paying other than salary. Come to the salary category. If you make two mistakes, 100% of expenses will be disallowed. What is the two mistakes, sir? Government says that you should deduct TDS on this salary, but you have not deducted. So not deducted TDS, or you have deducted the TDS, but you did not remit it to the government before TDS due dates. Then if you do these two mistakes, whatever salary you have debited inside the P&L, 100% will be disallowed. Simple. I am repeating. If you are making any expenses related to salary outside India or for a non-resident, then if the TDS is applicable on you in TDS chapter, you would have learned when is TDS applicable. If the TDS is applicable, you did not deduct TDS, Or second mistake, you deducted TDS but you did not deposit it in the government's account. Then in such cases, if you do either of these two mistakes, 100% of salary will be marked as wrong. It is disallowed. Simple. Come to the next category, other than salary, like professional services, technical services, you are giving it a payment for non-resident or outside India. Then two mistakes. What are those two mistakes? TDS not deducted or TDS deducted but did not deposit within the 139 one-time limit. Here it is TDS due date. Here it is 139 income tax due date. Kulla, if you deposit, no problem. Even after income tax due date you did not deposit, that will be treated as the second mistake. If you commit these two mistakes, what happens? 100% of such expense will be marked as wrong in the P&L. Come to the residence category. TDS not deducted. For residents, no salary given and all, everything is a single category only. TDS is not deducted or TDS is deducted but you did not remit it to the government account before income tax due date. Okay, only for salary non-resident it is TDS due date. For remaining two people it is return of income due date only. 139 one time limit. What are the consequences for residents, sir? Only 30% of such expense is disallowed. Simple. For non-residents, both of them, 100% of expense is disallowed. Here only 30% of such expense is disallowed. Simple. Now let us go and check how will it work out in the question. Payments to non-resident related to technical services. Apana, this is other than salary. If you deposit within income tax due date, it is enough. Okay, what are the two mistakes? TDS not deducted, TDS deducted but did not deposit within 139 one time limit. Let us see how much mistakes they have made. Out of 51,000, 10,000 TDS is not deducted itself. Therefore, 100% is disallowed. Apana, to the net profit, add back 10,000 fully. Next, 20,000 TDS deducted but did not deposit before income tax due date. Then add back 20,000. Simple. And another 21,000 TDS is deducted, also deposited. Super, nothing needs to be done because this is a tick. Only this is wrong and this is wrong. This is a tick. Correct or wrong? So this is what our answer will look like. Come to the payments to a non-resident for salary payment. It is 20,000. And the 20,000 less 7,000 TDS is not deducted. Achacho, it is a wrong. 12,000 TDS deducted but did not deposit before TDS due dates. Achacho, again it is TDS due date and it is not 139 one time limit. Simple. And come to the third category, which is this is wrong and this is wrong. This is 1,000 TDS deducted. Super, it is deposited within 139 one time limit, TDS time limit. It is deposited, right? Therefore, this is a tick. This is a wrong. It is a wrong. If you mark as wrong in the exam, what should you do? You should add back to the net profit because these are in the debit side of the P&L. Add back 7,000 and add back 12,000. Simple. Okay. Now come to the residence category. Payment made to the residents. It can be either salary or it can be either services, whatever it is. 10,000 TDS not deducted. Achacho, only 30% is wrong. 20,000 TDS not deducted. Achacho, TDS deducted but did not deposit within 139 one time limit, which means this is 30% wrong and this is 30% wrong. Super, this they have deducted and deposited within 139 one time limit. This is correct, wrong and wrong. Now in the answer, what should you do? Net profit, how much you should add back? You should add back only 10,000 into 30% and you should add back 20,000 into 30%. Purida, understanding till here? Fine? Okay, super. Come to the next one. Sir, however, if the assessee goes to the CASI, comes back, realizes his mistake that he did not deduct TDS or he deducted TDS but did not remit it to the government's account, he realized his mistake, he thought to clear his sins. Therefore, now in the subsequent years, he has deposited the deducted TDS into the government's account, which means he is rectifying his mistake, right? How much ever he suffered the deduction in the past, that much will be allowed as deduction in the current year. Say for example, in the given question, say for example, here he suffered 7,000 as a into, right? We have added to the net profit, right? In the future, if he realizes his mistake and deducts TDS to the extent of 7,000, in the future years, you can take a minus from your net profit 7,000. Simple. Similarly for resident, now you are making him suffer 10,000 into 30 percentage by adding it to the net profit. If you add to net profit, your profit is what happening? Your profit is increasing, correct or wrong? So you have added 10,000 into 30 percentage. In future, if he deducts TDS by realizing his mistakes, in that future year he can take 10,000 into 30 percentage as minus. Simple, clear, super. That is what I have written in notes here for section 40A1A and 40A1. What is 40A1? It is other than salary, and 40A1A is resident. This is 40A3. For this there is no such provision. Simple. Okay. Come back to 40A2. 40A2 is nothing but payments you are making on any expenditures related to related parties. Apana I'll call tring, mummy, sell me goods. You purchase for 1 lakh. 1 lakh worth items, you sell it for 10 lakhs to me. Which means in my P&L, I am boosting my expense like something high. Correct or wrong? Which is wrong thing, right? Therefore, government has introduced this section, section 40A2. What happens here? This section says that only to the extent reasonable you can take as deduction. To the extent unreasonable, it should be disallowed. In my case, I called my mom 1 lakh worth assets. She is selling it for 10 lakhs to me, which means unreasonable is 9 lakhs, which is a fake boosting. Correct or wrong? So 9 lakhs should be added back to my net profit. Simple. Who is relatives? A related party you are using. Who is relative? For an individual business person, spouse, mother and father, brother and sister, siblings, and all the lineal ascendants and all the lineal descendants. For HUF, AOP, BOI, members of HUF as well as a relative of the members also will be relatives to the HUF. Partnership business, partners along with the relatives of partners will be the relatives for the partnership business. Company, directors is the relatives to the company. Director order relatives also is relatives to the company. Assessee plus relatives together are having substantial interest up in a 20% or more voting rights or profit sharing ratios in any concern, then that concern will become the related party to the assessee. And holding company, subsidiary company are relatives. Not only this subsidiary company, there are, for example, say holding company is having A subsidiary company and holding company is having B subsidiary company, then these two subsidiary companies are also relatives to each other. Simple. This is what the relative definition is. Let us go and see how the numbers will be given in exam. Purchase of goods is made from spouse or relatives. As soon as you see a relative, section 40 capital A2 should be erased. Only reasonable amount is allowed. Unreasonable amount is not allowed. Correct? Okay, from entity in which assessee has substantial interest, these things I have purchased. Now come to notes. Market value of the purchases from spouse or relative is 8,000 only, but my spouse sold to my business for 10,000, which means unreasonable amount is 2,000. This should be added back to net profit. Simple. And from the entity in which I have purchased is for 20,000. Straight away question itself gave unreasonable purchases from the entity above is 2,000. So I should add 8,000 for spouse. Sorry. I should add 2,000 for spouse. Correct? 10,000 she sold me, but reasonable is only 8,000, which means 2,000 is unreasonable. I should add to my net profit. And second category, they itself have given unreasonable amount as 2,000. We will add this to net profit. Come to the next case. Next section is capital 40 capital A3. 40 capital A3 speaks about cash payments. What are these cash payments, sir? Any payment related to any expense in a single day to a single person you are making greater than 10,000. Otherwise than by account pay check, account pay bank draft or demand draft, or electronic clearing system using a bank account. Remember, only any revenue payment is covered here under this section. Simple. which means if you make in cash, it is disallowed if it is greater than 10,000. If it is greater than 10,000 but you are making in account pay check or account pay bank draft or electronic clearing system, no problem, it is a tick in the P&L. Simple. So in a single day to a single person is only the problem, which means Sukumar is making purchases from Janaki and from Sriram. I have made 5,000 cash payment and I have made 5,000 cash payment. In a single day I made more than 10,000 in cash, but not to single people, it is for different people. Therefore no disallowance, everything is correct. Simple. Okay, then such expense should be disallowed. Fine. Notes, I have marked it as notes. This 10,000 limit is for normal people. However, 10,000 limit will increase to 35,000 limit in case of the payments being made to transporters. Okay, and payments made for retirement benefits, it is 50,000. 1,000 stars I have marked it, please be careful. Now let me say some example and then teach you. See here, I have made stationery purchases 30,000 in cash. Oh, I have made greater than 10,000 in a single day to a single person. We'll assume that it is made to single person. And then entire 30,000 should be added back to the net profit. Remember, entire 30,000 should be added back, not in excess of 10,000. Entire 30 should be added back. Now, for a transporter, I am making 12,000 in cash. Greater than 10,000, no. For a transporter, 35,000 is the limit. Since I have made less than 35,000 in cash, it is fully allowed. No disallowance is made. Please remember, this is very, very important. For a transportation people, if you make a payment, 35,000 varki you can make in cash. And last one is purchase of agri products. For this, you will have to learn the exceptions. Section 40A3, read with Rule 2BB, Rule 6DD, sorry, not 2BB, Rule 6DD. What is the thing here? The section says all these people, even if you make cash payment greater than 10,000 in cash, you can take as deduction. That is, if you make any payment to RBI, government, LICs or banks, you can take as deduction. Payments related to agricultural produce purchase, forest produce purchase, poultry purchase, fish products, livestock, everything you can take. See, for example, I am into the restaurant business. Now I want to purchase a fish. I'll go into the fish market and I'll purchase for 10 lakh rupees some fish or some 1 lakh rupees. Let me make it lively. 1 lakh rupees fish purchase I have made. Now if I give account pay check to them, will they accept it? No, right? So government itself knows this and they have relaxed the provision for all these people. And I am not making any payment. I have purchased from A and A has, and I have also sold to A. I will net off all these transactions without making any payment. So with any book entry I have adjusted anything, no cash limit even if it is greater than 10,000. If I'm making payment via RTGS, NEFT, GPay, PhonePe, Beam, debit card, credit card, more than 10,000, it is allowed, it is not cash. Correct? It is allowed. Next, salary to employee you are making who is posted for greater than 15 days, which is normal place, other than normal place of business to him, then if you make payment to him, salary payment to him greater than 10,000 in cash, it is allowed as deduction. And banking facility is not available in any area, then you can make cash payments greater than 10,000. And payment to authorized dealers or money changers for purchase of foreign currency or checks, if you make greater than 10,000 cash payment, it is allowed as deduction, no problem. All these payments are allowed as deduction. Now let us go and see. So purchase of agricultural products 12,000 for business purpose entirely, even if it is in cash, it is allowed as deduction because the Rule 6DD gives us some exemptions here. Exceptions. Simple. Okay. Now let us go for the section 43B, which is the last section which we are going to discuss in this video. Remaining sections, whichever is uncovered, will come in the next part. 43B is a lively and a lovely lady. It has attraction on certain incomes. On whomever this lady gets attracted, those incomes will be allowed, those expenses will be allowed as deduction in the P&L only if they are paid within 139 one-time limit. True? Yes or no? Again, I'm repeating. 43B lady has love towards certain expenses. Whatever it loves, if those expenses are present in P&L debit side, it will be marked as a tick only if they are paid within 139 one-time limit. Simple. So that is what all the below expenses are allowed as deduction only if they are paid within return of income due date, that is 139 one-time limit. Appa, who are those people, sir? Who are those expenses, sir? Abdina, rates and taxes. It has a crush always on it. Bonus or commission which is payable to the employee by the employer. Bonus, commission, employer contribution to welfare funds, 43B will come. However, for employee contribution, 43B will never come because employee contribution that respective fund due dates is applicable. Then interest on loan taken from PFIs, SFCs, SIICs, scheduled banks, cooperative banks, NBFCs, notified NBFCs, all these people, all these expenses, all these people, if you have taken a loan, then you will make a interest payment, right? That interest will be marked as a tick in P&L if it is paid within 139 one-time limit. Next one is leave encashment. Next one is, what is this point? Strange point. Payment to Indian Railways for usage of railway assets. You should make a payment to railways within 139 one-time limit, or else it is not allowed as deduction in the P&L on accrual basis. Simple, all the expenses will be allowed on accrual basis. However, these expenses will be allowed only if they are paid within 139 one-time limit, mercantile basis. Simple, this is payment basis. However, there is one exception. EB bill paid to the state government, 43B will not come even though it is a rates and tax. Simple, it is an exception. So EB charges payable to the state government, 10,000 paid, 2,000 not paid, still both are allowed because 43B vanda mattumda it should be paid within 139 one-time limit, or else the entire P&L can be allowed as deduction on mercantile basis, accrual basis. So this is allowed, this is also allowed because 43B will never come here. Simple. Next one, expenses payable to Indian Railways, 30,000 paid on the same previous year. Super. You not paid. 43B says it is not allowed as deduction because it is not paid within 139 one-time limit. Rental amount for usaging airway assets not paid, still 100% allowed because 43B comes only for railways, not for airways, my dear friends. Simple. Then leave encashment. Out of 8 lakhs, 6 lakh is paid on 111 same previous year, 2 lakhs is unpaid, which means 2 lakhs should be added back to the net profit. This is a wrong and this is a correct. Correct. Salaries to employees, nothing is said. It is fully and exclusively for business purpose, revenue in nature. Therefore, it is allowed as deduction. Simple. This is the net profit. Thereby, I have given the additional information. Now, let us come to the second point, which is in the footnotes. We have already covered the first point in the footnotes. Now, let us come to the second point. Employees' contribution to EPF deposited by the employer into government's account as below. No, that is why employees contribution will never be there in the P&L because it is the employee's share which he is contributing to the RPF. But employer is acting as a mediator, right? He has to deposit that money within that respective fund due date. We learned that, right? 43B will never come for this. Instead, the employer should deposit the employee's share in that fund within that fund's respective due date. Now let us see what has happened. He has collected for April, December and February, say that respective fund account due date is next month, which is April, which means 15th of May, 15th of January and 15th of March. Income tax due dates they have given. You should never check for the employee's contribution. Simple. Employer contribution only 43B will come. Employee contribution 43B will never come. So you should never check these dates. How much is the amount? An actual deposit date. He was supposed to deposit within 15th of May. Ayyo, he deposited only 1 day lately. Still no problem. For the entire net profit, this entire 1 lakh should be added back as a penalizing gesture. It should be added as income to the net profit. He was supposed to deposit before 15th of January. He deposited well within the limit. Super. He is supposed to deposit before 15th of March, on or before 15th of March. He exactly deposited on 15th of March. No problem. Nothing will get penalized. Only in this 1 lakh will be added to the answer. Next, third point, above P&L missed to include below incomes. Income, that is gain on sale of shares. Super, thank God, for the first time you did correct thing. This will go in capital gains. This should never come in P&L credit side. You did correctly by missing it. Very good, Rapattu. Next, salary from teaching. 10 lakh rupees, but this salary you got out of employer and employee relationship. Suku, super, thank God, Suku, you saved us again for the second time. This should never come in PGBP P&L because this is not wholly and exclusively related to the business. Simple. This is how the PGBP question will look like in the exam, and I have given and I have tried as much as to phrase it crispily with not missing anything which is related to the exam. And some 4 to 5 sections which I have not covered here will be coming in the next part. Please do comment if you are awaiting for the second part, and if you want these PDFs, I will try attaching this. Please also let me know. This is the answer how I have presented. In the credit side, whatever is wrong, I have made it as a less item, 0.1, 0.2, 0.3, depreciation and additional depreciation, which we will have to minus it because company's depreciation we will add back. Come to the additions, whatever mistakes in the debit side we will add back. The rent paid to self, rates and taxes unpaid. This we all have discussed this. And all these things, depreciation, company's depreciation is not allowed. Preliminary expenses, VRS compensation, insurance premium due and in cash should not be taken. Bonus or commission 43B will come. Employer contribution to RPF unpaid within 113 and one time limit. NPS contribution, you will have 1,12,000 14% limit. You paid within the limit, so nothing is disallowable. I mean, nothing is to be added back. Interest on loan taken from scheduled banks, 43B will love them. So if you don't pay within 113 and one time limit, it will be added back. Similarly, all these things I have made a reference to all the answers. You can just go through this, but all the answers I have discussed at the point in the question itself. So this is how the answer look like. After minusing and additioning, you will get the final answer, which is called as taxable PGBP answer. That 1 lakh which we discussed now, right? Employees contribution to EPF deposited after the due date of that respective fund, and 43B will never come here. So I have added this also, and I have given the working notes for depreciation, block to blocks. Simple. This is done with the PGBP, and that's it for this video. I hope you have enjoyed this video. I tried helping you to the core, and you would have recalled many provisions by now. Please do see the full video without any skipping so that you will understand everything clearly. Please do refer to your friends so that they'll get benefited from this. I have tried my level best to make it very, very crispier, but not compromising on the quality. And if you are furthermore looking for any chapters, please do let me know in the comment section. OE part 2 is going to come from PGBP on the leftover sections. Please await. Please do wait for this. Please await for it. And this is for all this today. Bye bye. Please do like, share, subscribe, and also comment. Bye.